All right, folks, we are seeing more signs of a retirement time bomb coming up by the end of the year. And one of the canary in the gold mine is the GM announcement that their profit fell as the Trump tariffs added $1.1 billion in cost. So I'm just going to go and talk about GM first. And what does that mean? That the announcements from GM, what does that mean to your retirement, and then also what you can do about it? And so that's what we'll talk about now. Let's just briefly look at the article, the announcement from GM. And you can see here that GM said it suffered $1.1 billion profit hit from Donald Trump's tariffs and revealed no plan for a near-term fix to return to pre-tariff profit levels. So last year they made $3.06 for that same quarter, and now they're making $2.53, and they're not seeing any reason, anything that's going to happen soon that they can go back to that $3.06. So the current earning is $2.53 per share on an adjusted basis for their Q2, and they don't see any way for them to quickly go back to the $3 level. So GM's profit also suffered from higher warranty costs and a buildup in inventory from electric vehicles. They had made a lot of investments in EV, and now since the federal subsidies have been basically eliminated from the recently passed big ugly bill, then there's going to be, that's then the EV vehicles, they don't see any future for that for GM. GM results showcase the difficulty automakers face to maintain profits in an environment that newly penalized globally integrated parts supply chain and cross-border vehicle sales. So globally integrated parts supply chains, I mean, a lot of companies, this is why this announcement is so important, not just for GM, not just for the auto industry, but for any company that is globally integrated. They have globally integrated production and supply chain. I mean, you're thinking about high tech, you're thinking about laptop, iPhone, all these things. They all depend on having parts built all over the world, being assembled in different parts of the world, also being shipped and all that. So this is, we live in a globally integrated production environment and supply chain environment for most companies nowadays. And GM is lucky enough to have some plants in here. They could manufacture an entire car for the most part in the US. So they might be able to adapt a little bit better, but we'll see how that pans out. Not every industry is able to do that. Not every company is able to do that. So GM hasn't moved to raise their already high average sticker prices enough to recoup their tariff costs. Instead, they just opted to absorb the tariff costs and then basically take it on the margin, as they say. They're also planning to repatriate some of their production. They had actually announced that in June. So they're going to move some production from Mexico into the US. But I'm not sure that's really going to cut costs. So I know they kind of make it sound like it's going to cut costs, but I don't know. I think the manufacturing in the US is going to be more expensive than Mexico. That's why they had shifted to Mexico. But now I think that maybe with the tariff between Mexico and the US, maybe that doesn't make sense anymore for that in that situation. So the shares of the car maker fell 5.9% in one day to $50. So that's just unbelievable. And this is why I'm talking about it, about the retirement, how this is becoming a retirement time bomb. So GM stock fell 5.9%. GM is not the only one. You have Ford too that made some warnings. You have other car companies that are going to be in the same situation. Then you have some tech industries that are also doing globally integrated production. Every company that is doing that is going to be affected by this. And your retirement, your 401k, your pension plan, they all invest in the stock market. And if all these companies are falling from 5, 10%, then this is going to affect your retirement savings. Imagine if you lost, 5 to 10% of your savings, retirement saving, that may delay your retirement plan. And this may be just the beginning. After that, there could be a second wave, kind of like a snowball effect from this. So GM. But the net income still declined like 35% to $1.9 billion compared to $2.9 billion in the second quarter of last year. Now, the car makers said it can offset 1/3 of its $4 to $5 billion in tariff exposure later this year. But that also means that it cannot offset 2/3 of its $4 to $5 billion. So that means, like, there's more trouble coming ahead here. But they do have some measures, some mitigation efforts, and they haven't taken fully taken hold and have an impact on the bottom line yet, but they expect to do that soon. It also indicated that the toll from those trade levies may be higher in the current quarter, Q3, than the April and June period. So they expect that, so the numbers were bad in Q2, but they're saying because of tariffs, but now they're saying that in Q3, that's going to be worse, that these tariff costs are going to be even higher, and they can only offset 1/3 of these costs. So expect something worse in Q3 of this year when it comes to this. So this is kind of like the chart here. But let's go back to the retirement time bomb. So this announcement is unbelievable. So what does this mean? It means that corporate profits are under pressure. So GM's $1.1 billion tariff is, and a 30% reduction in profit is not the only one. So if tariffs has affected GM, it's going to affect Ford, it's going to affect a lot of other companies that are doing globally integrated production. There's a lot of them in America. We have done that shift for the last, 50 years. We've shifted from building things here to shifting in a globally integrated production setup. So that would also, eventually some of these companies are going to pass these costs through to the consumer. So they might be a blend. Maybe they're going to take on some of the profit, some pass it to the consumer. It really depends on if they can do that. But that would mean rising inflation if they do more of that cost pass-through. Some companies, they don't have enough of a pricing power to do that, so they're going to be forced to take it on the margin, and that means that their company, the valuation of their company is going to go down. So what you can expect from that, so that inflation is not a good thing, and that would actually reduce the consumer demand. So if the prices are going to go up on the vehicle, the GM vehicle, because they're passing the cost through, that also means that less people are going to be able to afford them, and that's going to reduce consumer demand. So weak corporate guidance means market volatility. So you're going to have, wild fluctuations about announcements, people adjusting differently to different things, to the tariff costs and other impacts that are happening. And this just means market volatility. That means constant changes in what's happening in the stock market. And if you're planning to retire, this is very critical, because if you're currently retired, it means that you have to be careful about when you extract your money from your 401k. If you are in your retirement savings are in a 401k right now and you haven't retired yet, that means that your stock portfolio in the 401k is going to be fluctuating. So that's not going to be good. If it's going to go back, then you have to really kind of like continue to save a lot more. You may have to wait until you retire, something like that. Also, pension plans are heavily invested in the stock market. So that means that even the pension plans are going to suffer from that. And so that may mean that some pension plans are going to be insolvent, and that means that either the whatever company that is offering this pension plan might have to sign some big checks to make sure that the pension plan is still solvent. So that's not good for the company either. The capital then it would be diverted from innovation. We're already seeing GM postponing EV, electric vehicle investment to focus on gas, kind of like going backwards. But that means that companies like BYD and other companies worldwide that have done investment in EV and research and development in that, if they continue to do this, that means that they're going to go ahead. They're going to know more about these technology than we do. And if in the future we ever want to go back to electric vehicle, we're going to be far behind. So that's something to think about. Now, the broader ripple effect, of course, is across all industries. So GM is not alone. I mentioned that. And they will have really two options. A lot of the companies, they're going to be able to either reduce profits. So that means take these tariff costs or other costs and then reduce the profit. That will automatically reduce their stock price and dividends. They could also pass this to the consumer. That means increased prices. That means higher inflation. That means also lower consumer demand. And currently, I had a chart earlier this week where I talked about the consumer demand and how the consumer spending has decreased consistently and dramatically since the beginning of the year. So probably that's going to be very tough to pass these costs for some industries to the consumer. So they're going to have to take it and take it on the margin, as I say. Now, if they decide they can reduce costs in other ways also. So this is the other way they can do it. Layoffs normally is the easiest thing to do. You can basically, everything else is a little bit harder, but layoff is one of the easiest thing to do to basically reduce costs. Moving production in the US, like we talked about for GM to move their production from Mexico to the US. That could actually mean like increased costs from what it is in the US already. There's also like going to be setup costs. There's going to be a bunch of stuff that's going to have to be done and supply chain adjustments. So is that really going to save cost this year? I don't know, obviously, but this is something that it might actually add cost this year so that they can be ready for 2026 and be in better shape for 2026. So, but right now, in terms of your retirement, this is what you should be looking for. So what can you do about it? There's 4 immediate moves that you should protect yourself and protect your retirement. Make sure you rebalance your portfolio. Look for these companies that are globally integrated. They're going to be impacted similarly to GM. So I would stave off of that. If you're familiar with options, you may want to play with that and kind of improve your portfolio by doing some puts or something like that. If you're averse to risk, then just stay away from these companies, these stocks that are in that situation where they may end up in the same situation as GM. You also want to diversify in other asset classes. I'm afraid that's going to bring on a snowball effect to the entire stock market, and the whole stock market is going to crash. So diversify in other asset classes like real estate, like gold, something that is outside the stock market, so that you're not impacted when this happens. The key here is to protect your capital. So don't look for big returns. Don't look for big risk. Look for something that's going to protect your capital. That's why I'm suggesting real estate. I'm a big real estate guy, so I just I always think of real estate as a good way to protect capital. But this would be one example here. And then increase your emergency reserves. So look at what's going on. Make sure that you cut your spending and make sure you're prepared. You have a big, especially if you work for these kinds of industries, you may be laid off maybe. So prepare to have a bigger emergency reserve so that if you are unemployed, that you can survive for a period of time. So again, bottom line here is GM's tariff hit is a canary in the gold mine. It's hitting earnings. It's going to cause market volatility. And basically, it's going to affect your portfolio, your retirement savings, your pension plan, and all of that. So now that's the moment to really think about what you need to do, update your plan, and then build some kind of resilience in case you lose your job, there's high inflation, we hit a big recession. So that's my recommendation. Really look at that and look at your situation. So if you're tired of being blindsided by the system and the news and don't know what to do about all the information that you're getting, make sure you like and subscribe to my channel, and see you next time.